So SPX has attempted to bounce a couple times now in the past couple days, but every single time, as you can see over here, as well as today over here, we always saw a rejection right after, and it closed today all the way down near 4,400. And personally, since Sunday, I shared how I'm looking for a short-term pop in the markets just to let go of a lot of the compression we've seen to the downside, because we've still been trading in this downward trend since all the way at the start of the month of August. So you can see here the two blue lines, the top one being the resistance over here and the bottom being the support. We traded within here with a couple pops above, but these were very short-lived because they were followed by more downside after. And you can see today we actually broke below as well, which means we have to be very cautious throughout the rest of the week. And personally, at least for my short-term pop outlook, we would need to get back within this channel right here in order for this to still be valid. I'm giving it for the rest of the week since there's only 2 days left. And also today was FOMC minutes. And typically whenever there's an FOMC related event, whether it's the actual meeting or the minutes are posted, we tend to see a lot of fake outs afterwards. So in this case, if this was a downside move, we could see a fake out to the upside tomorrow. I'm going to leave that up to the market and we'll see what happens there. But for the most part, with 2 days left, I would like to see a break back within this channel, which would lead to further upside, at least to the top of the channel before it decides if it wants to break out or not. Because my base case is still to see a break above this 4,500 level and eventually get to 4,525, this mini resistance. And then we can see if it wants to resume the downtrend or not, because this is a bit more time sensitive of a pop. I only believe that we can see this up move into the end of the month before the downtrend resumes. Because remember, I still believe we have more downside to go. However, at the moment, things are getting very oversold, and you just need to be very careful, especially if you are short at the moment, because the trend has been down now since the start of the month. We were talking about the pullback occurring before it actually started. If you remember those late July videos here on YouTube, but now we're at that zone where you need to be very careful, and especially if you haven't already, take profits on those downside positions. I personally was taking them in between the 4,450 to 4,500 range in my box over here. So over around 4,400 is definitely lower than that range at the moment. So you do have to be careful of any short-term pops because they tend to be very aggressive, especially the initial pop after the onset of a new pullback, which this would be the first major pop. And by major pop, I just mean like the 3 to 5 day time span. It can continue after that, but typically you see aggressive price action in that first 3 to 5 day time span where it's a lot of upside all at once and you see all that pressure get let out. But at the moment, we'll have to see what happens for the next 2 days here. Another thing I do want to note is the VIX. We did see a breakdown on the 15-minute chart of this upward channel. However, we did retest it later on the day. Something interesting about the VIX though, notice we were only up 1.95% today after a very substantial sell. It was 0.76% to the downside, which is a very large sell, especially considering how this year has been so far with a lot of upside, and especially coming off the summer where there was a ton of upside. 0.76% is a lot. So this is very noticeable, except for the fact that the VIX was unable to catch much of a bid. This can sometimes act as an indicator of a trend change, so it is something to watch for. My target still for the VIX in terms of this market-wide pop that I'm expecting is sub 14 still. I would like to see this gap fill before further upside. I do believe we will end up breaking out of this 1760 level eventually by end of September. But at the moment, again, like I said earlier, still believe there's some pressure that has to be relieved. And my target would be sub 14 first before it really starts to catch a bid later. But of course, we will see what happens here in the next couple of days. Another thing I do want to mention, QQQ here did break out of its kind of downward wedge slash channel that it's been within, although it broke out of it and it's been falling ever since. It was a very weak breakout and was unable to have any continuation. And right now we're seeing a possible retest down here, but this is also a fairly weak retest just because of how long it took to actually retest it. And considering the angle of this line, it's very steep, so therefore price had to fall down quite a bit in order to retest it over here. So I'm watching this along with, at the same time, Nasdaq's largest holding, Apple. This one's very interesting to me because it's currently in a wedge, and you can see here after hours fell just a little bit after closing, just a tad below. I'm very interested to see what direction this chooses because I believe it'll provide an indication of the next 50 points on SPX, as well as a large move on the NASDAQ. So watch this closely. Yes, after hours is a bit below it at the moment, but just watch for tomorrow's open, especially the first hourly candle for Apple. If it does break out above, then I believe that is an indication that the minor lows were made in the market, and we can see a lot more upside. Otherwise, if it does fall below, then we can see sub 4,400, and that short-term bounce thesis definitely was wrong in terms of timing. We'd have to wait for another chance in order to get that, which would basically mean waiting for a break back within this channel over here. so back above this blue trend line in order to catch a bounce to the top end before it attempts to break out. And a couple other things I do want to mention just based on flow and dark pools. We saw a lot of activity on NVIDIA today. Originally, there was a lot of premium behind calls. You can see here the 500 call as well as 400 calls. We had 14.1 million in premium for this in the money call for September 15th, but throughout the day, that definitely flipped because we saw a lot of put action, 10.4 million in premium, 4.4 million in premium, puts that were above the ask. It also is crucial to note a lot of these were very short term in terms of expiration. So these were 8/25 expiration, that is for next Friday, versus these more bullish bets were for September as well as October. So that's something you do need to take note of as well. But the thing I do really want to talk about beyond just NVIDIA's flow is dark pool levels, but not just for SPY today. I want to talk about J&J, Johnson & Johnson. This one has been insane the last couple of days. I look over here, if you filter from Monday to Wednesday, you scroll down on here, you could see we saw 1.2 billion in premium, 173 level. We saw 1.2 billion again, 2.2 billion in premium at the 173 level, 3.2 billion in premium at the 172.94 level, 2.9 billion, and also a couple large like 703 million over here. Very, very, very unusual to see this amount of premium in such a condensed amount of time for an individual ticker like Johnson & Johnson. So I do want to go over to J&J's chart over here just to do simple technical analysis. I personally haven't looked at this yet. I wanted to discuss it in this video. And basically what we've been seeing, a lot of activity around 172, 173, and 174. And typically with dark pools, it's not necessarily a time sensitive strategy that you can use just because these are shares at the end of the day, 1.2 billion in shares, for example, here at 173.78. But you can get a general idea of where institutions may have a bias towards, at least in the mid to long term, just based on where the stock is at the time of those prints. So right now, just based on this chart, you can see here, first thing that I noticed immediately, again, I'm just doing this without having looked at it before, but we do have a key downtrend over here. There's a possibility that will act as a hard resistance, which it is right now, but also there's a possibility that it can break out of this. And if it does break out of this, this is a major downtrend that started well over a year ago. So if it did break out of this, there would be a lot more upside. We likely see all the way up to the mid 180s before some type of a rejection, and then it could attempt to go even higher after that. But at the moment, it is acting as a hard rejection spot just because this is a key trend line. And what that means, just based on this trend line alone, it's best to look for some form of confirmation. If we're able to get above, especially with weekly close confirmation, because remember, dark pools and just large equity prints in general, those are not time sensitive, at least for the short term. These can be longer term bets. It's better to look for some form of longer term confirmation, like a weekly candle, before entering some form of a position. And so far, there's been 0 weekly candle closes above this downward trend line since it began. So if that were to happen in the near term future, there's a possibility for a long position to go to the upside. At the moment, though, it is acting as a hard resistance. You can see here, just based on these wicks on the daily, you can see this rejection over here, over here, over here, etc. That there is some weakness up here. And at the moment, just based on where it is, it's probably selling. At least that's my bias at the moment. But again, best to look for some form of confirmation. There's always a possibility it could break out of here. But we've seen numerous rejections off this trend line at a variety of different times, all the way back in 2022 as well. So just monitor the weekly chart here in the future, decide if it wants to reject off of here or if it wants to break out, and then there's a possible trade setup along with that. But speaking of dark pools, it's always good to look at SPY's dark pool levels each week, just because they have been very active throughout this year, and they can provide a lot of insight on key support and resistance levels, as well as just accumulation and distribution zones. But we do have between Monday and Wednesday of this week, 2.4 billion in premium, 448 level. So this is most definitely a sell before we saw a lot of downside. You can see the line up here, this 448 level. It's just been a sell-off ever since. The one that I'm really interested in is this purple line, as you can see up here at 439. So if you scroll all the way down for today, you can see we had 2.8 billion in premium at the 439.64 level. This is very likely buying, so we do want to see this hold. If there is going to be that short-term pop thesis, do want to see this level hold here. Otherwise, there's not too many other large ones around this range. The next largest would be all the way up here for 1.3 billion at 442.91, so almost by 443. Same thing with this 2.1 billion 442.98. So the market definitely has some work to do to get back up to these, but the closest one at the moment, this 2.8 billion, you do want to see this level act as a support going forward, or at least bulls definitely want to hold it above here if they want to see more upside into the end of the week and into the following week. But regardless, we'll have good confirmation by Friday, especially for that weekly close here for the S&P 500. Remember, main goal, if the pop thesis is valid into the end of the month, we do need to see bulls reclaim, especially by tomorrow, this key channel, and then take it all the way back up to the top end for an attempt to break out. Remember, we did break below today, so technically speaking, this would be bearish. However, we did have two fake outs to the upside as well, with this one over here, as well as, well, I guess you could consider three. We had this one after CPI, this one all the way back on August 4th, and then a mini one on the daily over here on August 14th. So there was about three fake breakouts to the upside. So this potential for a fake breakdown, always best to give it a little bit more time, but we certainly don't want to see under 4,400 with a decisive break heading into the end of the week. But other than that, as always, appreciate you guys watching this video. Watch these levels for this week. Continue to watch the tickers I provided, as well as Johnson & Johnson, because this is a very interesting one with the amount of premium we've seen. And I'll see you guys in the next video on Sunday.